Hello and welcome today to our panel on partnerships. My name is Gina Clarke. I am the Editor-in-Chief of the Fintech Times. And today we're going to be talking about partnerships, which is our theme this month. We've got a great group of panelists today. What we'll do is we'll kick off the session by having a quick introduction. Then we'll go to a talk on partnerships in the next 15 minutes and finally ending with a Q&A. So if you have any questions, do please type them in the chat and we'll get around to responding to them lately. So to start, let me introduce Charles Delingpole, the CEO at ComplyAdvantage. Perhaps you could introduce yourself and the company for us.
Great. Very awesome to be here, Gina. Thanks for taking time. My name is Charles Delingpole. I'm the founder of ComplyAdvantage. I guess we are an anti-money laundering data and technology company. I guess we've raised now like $100 million. We have kind of 500 clients in 80 countries, and our kind of mission is to eliminate all evil around the world, including cartels, sex traffickers, terrorists, chemical weapons dealers, etc., through advanced technology.
It's a great mission. Well done. And okay, next for us, we've got Phil Coole of OakNorth Bank. Phil, could I ask you to do the same and introduce yourself, please?
Yeah, thank you, Gina. Good morning, everybody. My name is Phil Coole. I'm the MLRO at OakNorth. So I've been with OakNorth for only about 8 weeks now, after coming from Investec Bank. Before that, where I was there for five or so years, and time at Lloyd's and the FCA as well before that. So yeah, my role is as the head of financial crime. OakNorth is a business. We have deposits on the one side, and then our main USP is on the lending side, where we lend to the SME market. And we also have a platform business, which sells the way that we make credit decisions to other banks outside of the UK.
Great, thank you. And finally, last but not least, should we say, Guy Waller, Starling Bank. Could you give us a brief introduction, please?
Yeah, hi there. I'm Guy. I'm the partnerships manager for Starling's marketplace proposition. Starling are a sort of neo-bank. We've got 1.5 million customers serving both retail and business. And the marketplace, which I'm responsible for partnerships for, is our ecosystem of third-party services and integrations that we have in place to enhance the user experience for our customers.
Great. And just to kind of refresh, so the theme today is partnerships, and maybe we can start with Charles. I mean, you mentioned your mission there at the start. I mean, that must put you in touch with a lot of different organisations. How do you sort of approach partnerships, and what do you hope to succeed with them?
Thanks, Gina. I guess for us, there are so many different vectors and different channels that if you're a money launderer or terrorist, that you can try and get your different ways of funding yourselves. As in the kind of Paris attacks against the Bataclan theatre were funded with a few thousand euros on debit cards. But then people like Jeffrey Epstein will kind of funnel billions of dollars through different channels like Deutsche Bank. So it's kind of every industry, every geography, and therefore what we're trying to do is relevant to every company and person in the world, and therefore it has to kind of be able to go through every country, and therefore that's kind of hugely expensive thing to try and distribute. And therefore what we tend to do is work via partnerships. So we have 100+ companies in every continent who will then distribute the data that we're building. And also in terms of building the kind of graph of all 8 billion people and companies and connections and facts, we can happily absorb thousands of different engineers, and therefore getting massive scale so we can have the whole world using that is really important. So the only way you can do that is via partnerships. I guess it's a very different form of partnership, as Guy might point out, to the kind of Starling marketplace, or as Phil might point out, in terms of the OakNorth partnerships that OakNorth also has with hundreds of banks around the world. So I guess different facets of partnerships that exist.
Yes, I mean, you mentioned there, so two of you share the same partnership, OakNorth and ComplyAdvantage. What are the key benefits there? Perhaps yourself or Phil can jump in with that as well.
Yeah, happy to, Gina. I mean, from our perspective, and as a growing fintech and as a growing bank, it's quite key for me as the MLRO that we have to partner with a tech firm and to grow together to better fight financial crime ultimately. You know, that's why I'm enrolled, and that's why ComplyAdvantage is here as a provider of that service to a firm like ours. I think it's one of those things where I think a lot of banks have in the past just seen vendors in this space as a service provider, and I think that view is now changing, and certainly with a lot of smaller companies, fintechs, challenger banks on the scene now, and as fintechs as providers as well, it makes sense that those firms are partnering together, learning together, growing together, and having a mutually beneficial proposition for both us as the bank and as in our instance as ComplyAdvantage as a provider. I think it will both make us better at doing what we're doing, and if we both learn from each other, which is a critical part of that. I don't think a partnership works without mutual learns on both sides. So yeah, that's probably my start of a 10 on that.
And just bringing in Guy as well, I mean, the marketplace on Starling is rapidly growing. How do you sort of manage the partnerships aspects there, and what, I guess, what's coming up in the future?
Yeah, sure. So as you said, at present, we have, I think, 27 marketplace providers across both business and retail. So I guess the intention for us is for that to be a place where our customers can go and integrate with other third parties that can really enhance or make their life easier, essentially. So we have integrations with the likes of QuickBooks and Xero to help our business customers do their bookkeeping. We have numerous integrations with insurance providers, pensions consolidators, and partnerships for us is working with companies whose values align with ours and really making that financial admin burden on our customers as minimal as possible. So really putting Starling front and center of our customers' minds and providing them with these integrations with our partners that are really beneficial for them. So it might be an existing customer that just thinks having that feed with Xero to do their bookkeeping is really, really helpful, or having that ability to consolidate their pensions with PensionBee. That's partnerships for us, is putting the customer right at the center of our thinking, as well as working with other fintechs that have similar views to us.
And what about those first steps of cultivating a partnership? Is it something, you know, you said that you've got consumers at the heart. So are you taking advice and instruction from consumers, or is it the opposite way around? Are you waiting for fintechs to approach you, I guess?
There's a few different situations really. So we do very much listen to feedback from our customers. So we have 1.5 million of them, and we've had a particular push in recent months and years on our business proposition. But yeah, we certainly do get feedback from customers who think you don't currently work with this company. It might be good to get that in place, because myself and others use them. But we also look at areas that we don't currently serve, and how could we find a company that could fit into that vector, and that means proactivity and going out there, finding companies in that space and understanding whether a partnership with Starling Bank would be beneficial for them as well. So it's kind of both. It's listening to customers, but also seeking out new areas that we don't currently service at the moment, and seeing if we can get a relationship going there to serve customers.
Definitely. And Phil, you know, what would you add to that? Is that sort of the same thing when it comes to putting together a partnership on behalf of OakNorth? Are you kind of looking for the two sides of the story there?
Yes, I mean, my lens is different to Guy's in that respect. That there, of course, is putting the customer first in much of what we do. But as a second line control function, I'm also looking at, you know, how do we protect the bank, and how do we best partner with a firm to enable us to do that. Now that can be a push from my side. It can be a push from an external provider coming to us. There's no one right way to do that. But there's ultimately got to be some kind of of need, some kind of progression that we want to make in our control framework and what we're doing as a bank to have that partnership. There's plenty of conversations I might have with prospective partners that might not come off in my space, because we only need so many. This is not a marketplace of providers that's required for my function. But having one such as Comply that therefore sits across our bank makes my job a lot easier and makes risk management much more effective.
And Charles, when you kind of first got in touch with OakNorth and you looked at putting together the partnership, what things did you have in mind that were important from a partnership point of view?
I say like two different sides of the story. I think first, I think you have to understand why Guy, Phil, and everyone else is here, right? I think in terms of like fintech and the opportunity, the reason why there's such massive growth and such massive opportunity is because the incumbents have done a bad job, and customers are unserved. There's kind of very poor choice, and the reason why Starling, OakNorth, other companies have raised such vast amounts of money is because there's a huge opportunity, but also a huge need for investment. So I think the companies here are out there to really change, disrupt, innovate. And so what you see with this whole new wave of companies is an opportunity to reset and fundamentally rethink every aspect and every dimension of the way that business is done. And because you're not encumbered by 50 years of legacy architecture, because you haven't grown by acquiring hundreds of different banks and then have stitched them together, you're able to build a proper technology stack, right? Google, Facebook, Amazon now comprise 20% of the stock market. There's all kinds of AI, cloud technologies. So I think what you see with innovators like Guy and Phil is an opportunity to fundamentally think about how things are done and then restructure everything. And therefore, the partial opportunity is to be able to understand why have the terrorists historically won, why does money laundering exist, and then to allow Phil's insight and knowledge to reanalyze those problems and then fundamentally overcome them. As in, it isn't just about marginal gains, it's about fundamentally rethinking and re-architecting every dimension of the problem such that you can like take huge steps forward. So I think that's why I love working with Phil, and that's why I think the partnership is so powerful.
Definitely. And you've mentioned, some great plus points there with regards to sort of, there's no archaic architecture or an infrastructure to get around. But maybe this is one more for Guy. What obstacles are you finding then, if you're so fast to kind of get things up and running, when it comes to putting a partnership together, what do you think are the biggest obstacles?
Yeah, so I think there's a couple of things that I'd call out. First of which would be not necessarily always an obstacle, but definitely something that's worth fleshing out very early on, is getting agreement from both sides on what good looks like, what a positive partnership looks like, whether you both want to be, making sure views of year one or year two are aligned. At Starling, we're looking for partnership arrangements that aren't necessarily short term, a year or 2 years. We're looking to work with providers on the marketplace for a number of years and make that mutually beneficial. But also with Starling and the fact that the marketplace is predicated on two-way API integrations, sometimes an obstacle is ensuring that, in our case, the partners we work with are technically capable and ready to do and invest in an API integration, which can take some weeks to deliver, then test, and then launch. That's certainly, maybe uniquely to us, that's definitely something which can be an obstacle, but yeah, that's what I'd say.
Great. And Phil, what about you? Would you say there are obstacles in terms of sort of compliance, or what are you thinking there?
Well, I think with any new partner, there's a possibility that you don't share exactly the same values in everything that you do, and then the ways in which you work. There's always going to be some slight differences in kind of management style and the way people want things done. And you only really get to understand what those are as you start partnering together. And maybe the way in which I might look at Comply, for instance, and say, well, it'd be great to develop the tool in this way. Might not be necessarily on the roadmap of Comply, and then you've got to, you know, work together if you feel you need to bridge some of those obstacles. But I don't think in my space they should necessarily be huge. I mean, those obstacles should be rooted out at the stage before you're partnering, and you should only really be getting into bed with a company once you're content and you're happy and you understand that your vision is aligned, and that you're going to be able to learn from each other in the future. So yeah, from my perspective, I would like to think obstacles would be limited as once the partnership is up and running.
Well, we're kind of graduating into the next part of the session. We're looking to take some questions. So if anybody watching does have some questions, please feel free to write them in the Q&A. One of the first questions that's come up is, obviously we're going through a bit of a tricky time at the moment. There's lots of kind of big loads flying around and paralleled and everything else. Charles, what kind of difficulties in partnerships have you found, or advantages in partnerships that the coronavirus has brought for you?
I guess the difficulties in partnerships. I think a huge risk that many companies face is being a kind of venture capital subsidized outsourcing shop for kind of large companies. I think what you need to have is that kind of central subordinating vision, right? So, and you can't just be incremental gains, right? So for us, like I started the company like 6 years ago, right? And it's been the same vision since day one, but it's been the relentless application of resources towards that. And so we raised like $100 million now, but it's always been the kind of incremental calibration on that vision to confirm that you're not crazy. So like you saw this company called Quibi had raised $2 billion in the past year, spent it and then collapsed, right? That's like a monumental dumpster fire of chaos, right? So you want to avoid that. So early on, you know, I put in $250,000 of my own cash and then worked for like, you know, months with kind of partner firms just to kind of confirm that I was on the right track. I think, but then we can raise 100 million in order to build the end vision, which is every person, every company in the world kind of being able to be driven by AI. So I think you have to keep that kind of happy medium between not being a kind of VC subsidized outsourcing shop, also not being crazy. So it's kind of partly listening to companies, but also bearing in mind the end subordinating goal of how you're going to change the whole world. So yeah, I think people keep you sane, basically.
And Phil, what do you think? You know, COVID and partnerships, are you still on track with what you had before, or have things changed for you and you've gone in a different direction?
No, I wouldn't say COVID has had much of an effect on the way I view partnership going forward. We're in the middle of a project to increase our partnership with Comply at the moment, with a transaction monitoring offering. We've got to live with COVID, right? And the current situation, I don't think we can any longer see it as an obstacle to get what we need done. We've just got to work in this new environment. So yeah, we've just got to progress through it.
Guy, is that same for you as well, ploughing through?
Yeah, very much so. Obviously, Starling are a fully digital bank. We don't have branches. We have a web application and an app. And in that sense, the people that we're partnering with remain the same digital fintech businesses for the most part. And so our strategy is unchanged. We've just got a pipeline of providers to work through, and we're looking for new and exciting verticals to partner into, and that remains the same.
Great, and we've got a question I see from Michael Latham, Financial Crime at Santander. How do you see the future of fintech partnerships in the light of the recent FinCEN data security breach? Would anybody like to take that one on?
I can certainly try, and I'm sure Charles might have something from just a general data perspective. I mean, I don't, leaks is nothing new, and leaks will continue to happen, I'm sure. I don't think necessarily what's happened with FinCEN is a watershed moment that further fintech partnership is required. I think it's generally clear that the amount of data available is increasing due to leaks and other things, and firms need to assess whether they've got the capability to do anything with that data should they feel that they need to, and that's where fintech partnerships can help. You know, firms might often not have the capability to consume data, extract data, obtain data, and partnering with a company like Comply or otherwise that can do that is certainly a step in the right direction to assist with, you know, this ever growing batch of data that's out there that you can use.
I think the core of the question from Michael with regards to Gimlet and FinCEN is this kind of tension between the kind of chilling effect of transparency being broken by leaks from BuzzFeed, right? As in, the banks shared that information and had that trust violated by having it splashed all over the press and being thoroughly criticized, but also in terms of private confidential information, the private confidential information sharing, and therefore how do you balance the regulatory obligation, but also the ability to prevent financial crime from acting as a kind of terrorist financing nervous system? As in, if one institution is attacked, then the rest should know. And data sharing has been this kind of holy grail. So I think, personally, I think we have to press on. And I think data sharing will be very powerful. And I think FATF and other institutions are making huge strides towards having that that facility made available. And I think in 5-10 years time, that'll become very common and that'll have a huge impact. So I think great question from Michael, and hopefully we can work on that going forward.
Definitely. And the next question is for Guy. It says, I am a big believer in the marketplace concept, but how is Starling managing to share data with their marketplace partners, looking at both a know your customer and a GDPR perspective?
Yeah, sure. So before we partner with anyone, and as I said before, we've got 27 providers at the moment, we have a very strenuous and thorough due diligence process on all of our providers to make sure that they have really stringent policies and processes in place for data sharing and data protection, information security. But the kind of crux of our marketplace proposition is that customers can, within their app or within their phone, seek out the marketplace, look at whatever category they're looking at, whether that's accounting or pensions or insurance, mortgages, learn a bit more about the provider in question and think, okay, I'd actually like to explore this further, having reviewed that information, and consenting to sharing data and integrating with that provider. So for us, it's all about transparency. It's all about transparency into what our providers do and what they can offer our customers. But then similarly, if a customer chooses to take up a subscription or choose to link their account with one of these providers, they go in with their eyes open that they're agreeing to share their data in some instances in order for signing up to purchase a product. So yeah, there's full transparency, and we're very robust in terms of who we work with.
I guess when you're looking for somebody to work with, maybe this is one for Phil, but what would you say are kind of the top things that somebody should go into when looking for a partnership with OakNorth? What do you like to look for in your partnerships?
I think initially, certainly someone who shares our main company values, so being customer centric, fast moving, dynamic, and passionate about what we do. I don't think we would partner with a firm that doesn't have that as some of their core values, but particularly from a customer perspective. For me personally, and in the space that I work, there's obviously some fairly obvious things from a a decent tech stack, data access, and the way in which they've built their product, and is that product one of the best in class? That's some kind of standard stuff I would be looking for. And then from a partnership model, are we looking to grow together and learn together and shape what we do together? We want to scale, and I'm sure our partner wants to scale as well. And can we do that effectively together? I'd love to be in a partnership where it's give and take, give and receive rather, in terms of how can we better help build Comply's product, and how can they use their wider experience in the industry to give stuff back to us in terms of what we're doing, because we do a lot of this stuff in isolation in our jobs, and it's great to have that wider view and wider industry exposure, and companies like Comply can bring that to us.
Definitely. And Charles, is that sort of what you're looking for as well in a partner?
Yeah, I think what you've seen in other partnerships, perhaps like perhaps in the core banking space, is you have a kind of single partner, and therefore you can optimize on the wrong future strategy. Whereas I think what you really want to do is calibrate across a range of partners, and then use that kind of scale to invest extremely heavily in building something which wouldn't be achievable without a partnership. So for us, we can spread the kind of like the kind of £40 million a year cost of what we're building across multiple companies, but also there's no point applying like those massive financial resources across the wrong direction. So I think what you want is strong, but also intelligent and forward-thinking partners who are going to move you in the right direction. And therefore, I think companies like Starling, like OakNorth, who have a kind of very clear direction, who aren't encumbered by arbitrary legacy technology decisions which force them in incorrect directions, are the perfect partners.
And I guess one last question for Guy, in terms of onboarding into the marketplace, what's the sort of timeline? How fast can you develop a partnership and get it on there?
Yeah, so it really depends, I suppose, on our queue of providers, how lengthy that is at that time, but also how quickly providers can move. As I kind of alluded to earlier, we have due diligence processes, as you would expect as a bank. And then the provider, more often than not, has to build an integration to our public API. So generally, we're thinking around the 2-month mark for start to finish, discussing commercials, what the partnership will look like, what value that will add to our customers, and really defining, as I said before, what does year 1 look like, what does year 2 look like, and what will this integration do for our customers. So all of those things bundled together, with a good run, you're looking at sort of 6 to 8 weeks, and then obviously a bit of time at the end for testing the integration, making sure that the customer experience is as optimized as it can be, to really ensure that as many of our customers who find that partner and choose to go through the customer flow, as many as possible do so.
Excellent. And Phil, a last question for you. You've talked about sort of a long-term partnership is the aims and the goals. How do you sort of build that? Do you check in often? Are you kind of looking at developing new themes? How do you build on a partnership once it's started?
Yeah, I mean, it's an interesting time to ask me that question, because I've not really been at OakNorth long enough to have fully developed my thinking around how that exactly should work. But I don't think a partnership will work if we are not in tune with each other, and we will not be in tune if we're not meeting regularly, discussing regularly, talking about Comply's roadmap, talking about our roadmap and where we're going and what we're seeing, and vice versa. So I would like to build out a model where we're checking in on a monthly basis around those themes and learning and sharing together. I mean, I'd be also heavily reliant on CA to be flagging stuff proactively as things are coming up with the product and how it's developed, outside of a more structured approach to how we engage. So yeah, that's my general thoughts off the cuff.
Okay, good. Well done. And Charles, a final question for you then. How do you sort of see the next 2-3 years going in terms of partnerships, and where would you like to be?
I think, I guess I'll answer that on a kind of, firstly on a kind of product dimension, and then secondly on a kind of scale dimension. I guess in terms of like products, so we raised $50 million in July, and that's kind of primarily around product development, as in we're hiring, we hired a new CTO, a new VP engineering. We kind of hired new CMO in New York, but primarily it's around kind of horsepower for engineering and really building out the kind of underlying graph for every person, every company, every fact, every linkage, just so you can surface all the insights that would be missed otherwise. So I think the $100 million is really to build out the future, something which didn't exist beforehand and no one else is really building. So and in terms of scale, in order to kind of pay for that, we really have to be very, very global in terms of, we really have to be big in America, we have to be big in Asia. And so therefore, like, we really need to grow as a company. But primarily the main metric will be how happy Phil will be, and the delight on his face as he sees another terrorist going to jail, and another money launderer that hasn't managed to be able to penetrate his kind of ring of steel around OakNorth.
That's a brilliant answer. Well, thank you very much to my panel for joining me today, Charles, Guy and Phil, and have a wonderful rest of your day. We've started it off very nicely. You've got lots of time to think about partnerships now, so that's good.
Right, thank you very much. Thanks for having me.
Thank you very much.
Thanks all.